All right, candle range theory trader, back with you for another video talking about win rate, candle range theory, and what to expect. So let's not waste time and get right into it. So what this video is going to cover is why a trading system's win rate doesn't exactly matter as much as you think, what to expect, and some income examples. So a lot of people are obsessed with win rate because they want a system that's going to get them 90%, 80%, whatever. So they want to have confidence in knowing that, hey, look, if I place this trade 10 times, I should win 80 of them. Or if I place this trade 100 times, I should win 90 of them. That's not reality. So that's not that's for most people. For most people, okay, win rate. But the thing is, win rate doesn't matter as much as your losses do. Okay, because the thing is, let's say you have a 90% win rate, okay, and you win $100 a trade. Cool. But let's say you take one loss, and your loss is $1,000, or $2,000, or $10,000, depending on your account size. The only thing that really matters is your risk management, because if you have one bad trade, that one loss can wipe out all of your gains. Okay. So, more important than a win rate is risk management. In other words, for that 10%, okay, or 90%, or 30% that you're wrong, how much are you losing? That's the most important question to focus on instead of, well, I win 9 out of 10 trades. Okay. Because I promise you, one bad trade can wipe out all or most of your gains or blow your account. Talk to any trader long enough, I promise you, most of them have blown an account based on one or two bad trades, even though they thought their system was just top notch. Okay. So risk management is more important than, oh, I can win 8 out of 10 trades. Okay. So what should we expect from the candle range theory? Here's why I want to have a little bit of a paradigm shift here. Okay. Your best bet at the end of the day is to view trading as a coin flip. Once you take a trade, your odds are 50-50. I don't care what method you're using. It could be candle range, ICT, market maker method, EMA crossovers, whatever, you name it, Fibonacci, it doesn't matter. Once you click buy or sell, you are either going to win or lose that trade. So after you press the button, the only next question is, okay, if I win, how much do I make? Or if I lose, how much I'm going to make? But you're either going to win, lose, or possibly break even, okay? But ultimately, if you just let the trade play out, those are your WAD. That's your win rate right there, 50-50, win or lose. How I like to view it, or how I admonish you to look at it as a basketball player shooting a shot into a hoop. Okay, so my foreign people, a soccer player kicking the ball into the goal, or trying to. The ball is either going to go in the goal or it's not. Okay, it's going to get blocked by the goalie or it's not. Or if a basketball player, that ball is going to go in the hoop or it's going to bounce off. But once they let that ball go, one or two options. View your trades the same way. But if you miss a shot, are you going to stop shooting? No, you keep shooting, and eventually you're going to make some. You're going to lose some, and you're going to win some. But it's 50-50, period. Okay, those are the odds. So this is powerful because let's take a look at an income example with a 50% win rate, with a starting balance of, we'll say, 100, 1,000, 10,000, 50,000, or 100,000. Now I'm just going to keep the math very brief. And even though this is a little more nuanced than this, I'm going to use a general example. So let's say we have a 50% win rate across 10 trades, 5 wins, 5 losses. And again, I know the math is more advanced than this, but I'm just going to keep it very simple because I'm not trying to be a mathematician here. So let's say you use a 2% risk on each of your trades, regardless of your balance, okay? So every single trade, you're going to go in with 2% risk, and your goal is 6%, okay, of your account balance. So to simplify that, will be a 1 to 3 risk to reward ratio. All right, 1 to 3, simple enough, right? So you're either going to lose 2% of your account, or you're going to gain 6% of whatever your account is. All right, so let's take a look at the numbers here. And I just kept them on streaks to keep it simple. So let's say you spend 2 weeks taking 5 trades and you lose every single one of them. Okay, 2, 2, 2, 2, 2. Last time I checked, 2 times 5 is 10. All right, that's about 10% percentage-wise, a 10% loss if we just add up all these twos. All right, 10% loss where you lost 2% of whatever your balance is at the time. Okay, at the time. I'm just using percents though. I'm not going to show you the actual dollar amounts. I'm just keeping this as simple as possible. But now let's say for the next 2 weeks you win them all. Still 50% either way. So you gain 6%, then you gain another 6%. Gain another one, another one, another one. Okay, 6 times 5. Okay, I'm sorry, 6 times, let's see, 1, 2, 3, 4, 5 is 30. Fix that. All right, 30% gain. Okay, that is a 30% gain on your account. So your total gain here, let's fix that, is going to be 30 minus the 10 gives you about 20% total. Okay, we're going to call it an even 20% net gain. So you've taken 10 trades, you lost half, you won half. Okay, but at the end of the day, you've made 20%. Can you make 20% work? Well, let's take a look. If you have a $100 account, that'll be 20 bucks. Okay, more than you started with, obviously. Let's say you have a $1,000 account, you've netted 200 bucks. $10,000, that's 2 grand. 50 grand, you've netted 10,000. 100 grand, that's 20,000. Okay, net profit. All right, net profit. That's money in your pocket. This is with a 50%. This is flipping a coin. Would you flip a coin 10 times and make it 20 grand? Could you live with that? Could you live with those 5 losses in a row? All right. Now, obviously, this is going to be easier with a funded account, unless you have, unless you're just that well off. But ultimately, the point is that you cannot let the losses bother you, because you know that if you stick to the system, okay, you could be looking at a possible 20% gain by managing and capping your risk. Okay. Now, this is just with a 1 to 3 example, but you could just as easily do this with a 1 to 2. The numbers are going to be a little bit lower, but the same principle does apply. All right. Same principle. So in conclusion, remember that your odds are 50-50. When people talk about a win rate, they're only basing it on either what they've been doing, or they've back tested a model and they've seen that, okay, well, I back tested this for a year and I found that it won 65% of the time. Okay, that's fine for what happened in the past. But going forward, who's to say that same model can't lose? Okay, 60% of the time. They just don't know. All that back testing is going to do is tell you what has happened, not what is going to happen. So get it fixed in your head that my odds are 50-50, no more, no less. Okay, 50-50. That's all I got. Not 90-10, not 60-40, definitely not 100. Okay, my odds are 50-50. So that's what you're looking at. But by controlling your downside, 1 to 2, if you want to do 3%, whatever, it's up to you. Okay, you can have a bigger upside with every trade. Okay, because some trades you'll risk 2%, you may make 5%, you may make 3%, you can make 10%, depending on if the move is strong enough. You just don't know. Okay, but you cannot let the losses get you down. And that's where your psychology does come into play. You have to keep shooting. One of the best examples I've heard here in America, we have baseball. And a person with a batting average of about 300, that's considered like world class. But you know that an average is just 300 batting average, you can only hit 3 out of 10 pitches. But if you can do that in baseball, they'll pay you millions of dollars. In trading, if you can hit 5 out of 10 pitches, you can make 20 grand a month if your account's big enough. I just showed you that just by hitting half. So can you do more? Sure. But be satisfied with 50%. Okay? Don't get caught up in the win rate. It is a trap. Focus on executing good trades, following your plan, and all of this right here, that right there is going to be yours. If you deviate from the plan, this will not be realized. Okay? It won't. All right? So I appreciate you watching. Thank you so much for your time and attention. Be sure to subscribe to this channel. And my word to you is that your trading will never be the same. I appreciate you, and you have a great rest of your day.